the jet-setting wealth advisory podcast, where your financial journey takes flight with David T.U. As an airline pilot and financial expert, David merges the aviation industry and wealth management to help you navigate today's complex financial skies. Each episode features expert insight, blending personal stories with essential financial strategies. We ask that you fasten your seatbelts and sit back as we prepare for takeoff. Our destination, your financial empowerment.
Hello, everybody. Welcome to the Jet Setting Wealth Advisory Podcast. I'm your host, David T.U., and today we're joined by Mike Jesowshek, CPA, who is the founder of TaxElm, he's also the host of the Small Business Tax Savings Podcast and author of the Small Business Tax Savings Handbook. Very interesting there. Mike has helped thousands of entrepreneurs across the country reduce their tax bills legally and efficiently, with a mission to make tax savings simple, accessible, and stress-free. He breaks down complex tax strategies into practical steps that business owners can actually use. Through his podcast, educational content, and his firm, Mike empowers small business owners to take control of their finance, minimize tax liability, and keep more of what they have earned. In today's episode, we'll talk about the biggest missed tax opportunities for business owners, common misconceptions around deductions, and what proactive planning really looks like when it comes to building long-term financial health. So first and foremost, Mike, welcome.
Yeah, David, thanks for having me.
Absolutely. So let's get started. Let's talk about the fact that you've said business owners aren't just overpaying, they're confused and frustrated, which I'm a business owner myself, and I can certainly sympathize with that. What made you want to solve this, I would say, complex, difficult, and an emotional problem?
Yeah, tax planning is interesting because it has different facets on why I believe people are afraid of it or sometimes just think it's too big of a hill to climb. And, the reason I really got started in this whole tax planning thing is I owned an accounting firm. And when I owned that accounting firm, all we did was bookkeeping and accounting work. And I was referring out tax work. And I could never find a good partner that could do tax planning. Great tax preparers out there, people that prepared and filed taxes, that was great. But a complaint that I would always hear from my clients is, Mike, I'm just paying too much in taxes. What do I need to do? And I couldn't find anyone that was helping them with it. Even their tax preparers weren't helping truly save on taxes. And so I started to research it myself and really kind of fell in love with this idea of tax planning. And, I think that when we talk about tax planning, it's a concept that, first off, people don't really know what that even means. When people hear the word tax, they think preparing and filing. I see my accountant once a year. And then we have, and that's good, that's required by law, that's important. And I always say tax filing is just as important as tax planning. But tax filing doesn't provide any tax savings. And so that's what a lot of business owners think of tax is that once a year appointment they have. Then you take a next step up and we talk to business owners that say, well, my accountant, we reach out to, we touch base 2 or 3 times a year. And in the middle of the year, they tell me how much I need to pay in estimated taxes. And I make that estimated tax payment. So that's planning for my taxes. And so, yeah, I do tax planning with my accountant. And again, that's not truly saving on taxes. Estimated taxes are important. We obviously want to keep on top of that. But making payments to the government does not save on taxes. That's just prepaying that amount that is eventually due when we file our taxes.
Sure.
So that's, I think, the confusion is a lot of people don't really understand what tax planning really is. And when I look at tax planning, I look at it as something that's done between January and December, because once the year is over, a lot of strategies get thrown out the door. Now, there's still some strategies we can do that we can, go backwards on, but the majority of the tax planning strategies that we want to implement need to be done between January and December. And so tax planning is simply this concept of learning what strategies are available to you as a business owner, and then learning those strategies, and then actually putting them in place. And I think that there's a lot of confusion with tax planning in the fact that people think like they're cheating the government, right? Like if I owe the government $100,000 in my tax bill last year, and this year I do all these strategies, and now I only owe them $20,000, that means I'm paying them $80,000 less in taxes, and they feel like, that's not good. Like I just cheated the government out of $80,000. When in fact, it's the opposite. We tipped the government $80,000, and the government puts these laws into place. They put these strategies in place for a reason. And the reason tax strategies are around is because the government wants something that they either don't want to do themselves or they don't have the ability to do it. And so they incentivize their citizens to do it in the form of tax breaks, to say, hey, if you're a business owner, we'll give you tax breaks because we want business owners. Why do we want business owners? One, it helps stimulate, grow our economy. They hire employees, they hire our citizens. We want business owners. Or maybe you invest in real estate, and the government says if you invest in real estate, we'll give you tax incentives for that. Why?
Sure.
Because they want more housing, they want affordable housing, they want their citizens to have places to live and various different things. And so the government, the tax code is all these different incentives that the government has put in place, but they don't advertise it and they don't do it for you. So if, let's say we look at hiring your kids in your business as an example, that's a black and white in the tax code. The government talks about it. The government wants you to utilize it, but they don't put it on a billboard and say, hey, you need to be hiring your kids. Or if you don't hire your kids, they don't just say, oh, don't worry. Like when we file your tax return, we'll include payments for your kids in there. They don't
automatic
do those types of things, right?
Right.
And so it's our responsibility as a business owner to understand what incentives are available to me and then to correctly implement those incentives.
Fantastic. Great answer. So can you enlighten us and tell us about your own entrepreneurial journey and how it shaped a vision for your TaxElm? And we'll talk about TaxElm.
Yeah, so I've been an entrepreneur since the age of 14, started in the online marketing industry. I had my first exit at the age of 18 in an affiliate marketing type company I had, and it's not too exciting. It was like an $8,000 exit, but at that time it was exciting to me. But from there, continued to expand in the online marketing space, but knew, I had that typical entrepreneur mindset, like everything's going to fall apart tomorrow. And so I kind of need a backup plan for that. And of course, that never happens as an entrepreneur, but it's a mindset that we typically tell ourselves is that things could fall apart tomorrow when we lose everything.
Got to have a plan B.
Yeah. So I went to school while I was running those online marketing firms, went to school for accounting, got my master's in accounting, ended up getting a CPA in accounting and switched to the finance side of the companies that I was a partner in. And we got to a point where we had 7 partners in one company, all really good at specific areas, but all very different areas. And so we said, instead of trying to pull one company in 7 different directions, why don't we go out and do what we do best? And so being having a good reputation, being in the finance side of what I would call kind of a unique industry. I started a cloud-based accounting firm back in 2013. And cloud-based accounting firm is a typical thing nowadays, but in 2013, cloud-based accounting firm wasn't that common. But started a cloud-based accounting firm focusing on that in that specific industry. Okay. Just doing accounting, bookkeeping. I was not into tax at that point. And then, as I kind of mentioned, started to refer tax out, was kind of getting this backlash from business owners of saying, hey, I can't get good answers from my account. Either, they tell me it depends when I ask about tax strategy, and I just kind of walk the other way because it sounds like too much work, or I can't get a hold of them, or I don't understand what they're saying. Like they probably are telling me good stuff, but I don't really understand it because it's so technical. And so really started to dive into this concept of tax planning to say, how can I help my business, help my clients out in this area? Sure. And just fell in love with this concept of tax planning. So about 8 years ago, started a podcast by accident with the sole goal of saying, how can I help business owners understand what strategies are available to them? Because this whole concept of it depends, it is true. Like everyone's situation is different. But what I found when I was looking at tax strategy is that 90% of the strategy, it doesn't depend. So if we look at this concept of hiring your kids, how do you do it correctly? What needs to be done? What documentation do you need? How do we find this out? That's all the same for everybody. It's the last 10% of saying a plumber is going to hire his kids a little bit differently than a financial advisor, or someone with an 8-year-old is going to hire his kids a little bit differently than someone with a 16-year-old. And so I made it my mission on our podcast to say, okay, how do we not just give fluff on say, hey, hire your kids, get a business deduction, they pay no taxes on it, but how do I actually tell people how to do it so that they can get 90% of the way there? So instead of going to their accountant and say, how do I hire my kids, and get kind of that pushback and walking the other way, they can say, no, I want to hire my kids. I understand how to do it. Here's kind of the rate I was thinking for them. Here's the tasks I was thinking of having them do. And here's how I plan to do it. Can you just help me button up these last couple things? And so that was my hope with the podcast. And again, with the podcast, really enjoyed kind of teaching at the mass level, teaching to a lot of business owners at once. So eventually sold the majority stake in my accounting firm back in 2021, went full time with the podcast. And at that time,
Oh,
we had a training program that we would train tax strategies. So you sign up to the training program and you would get all these tax strategies. You'd learn how to implement them, everything you need to know.
entrepreneurs, business owners
Correct. Yep.
signing up for this. Okay.
And the problem that people would come is they say, Mike, it's great, but there's 150 strategies in here. And I log in, I don't know what to do. Like, it's just overwhelming for me. And so that's when this concept and this idea of TaxElm was born, of saying, how can we help business owners build a plan to say, here are the strategies that you need to be focusing on, and how do we actually help them implement those strategies in an accurate and correct way, while also being kind of that support arm to help them. If any questions arise, they have full access to our team. And so we launched TaxElm in November of 2023, and that's really what we've been doing ever since, is saying, how do we help business owners pay the least amount of taxes legally possible? How do we help them from start to finish fully implement the tax strategies available to them?
I think it's a fantastic, huge value add service. Let's just backtrack just a little bit. CPAs are probably the most trusted advisor to their clients, especially if their clients are business owners. And business owners obviously are taking advice and getting prudent guidance from their CPAs. But there seems to be, and it's proven over and over again, that the CPA, who's supposed to be providing a lot of value add to the business owners, and the business owners expect and anticipate that from their CPAs, but yet what I found is about 90% of the CPAs basically listen, do a 180, and walk away from those questions that are being asked on a daily basis by business owners. What is the cause of the CPAs? And I ask this with a lot of my CPA podcast guests. What has caused CPAs, 90% of the CPAs, to basically not wanting to do real tax planning like you have just described at the TaxElm level? Why is there this big gap between what is asked of their CPAs and what their CPAs actually provide?
Yeah, it's a great question. And I have a theory on kind of why I think you run into that problem with the majority of CPAs out there. And the first theory or concept is CPAs traditionally are heavy preparers. So they prepare and file taxes really good. And no one oftentimes complains about that. They say they prepare and file taxes great, but I have large bills. When it comes to tax season, I'm paying a lot to the government. And so they prepare and file taxes really well, and they overwork themselves in that area because that's what they know best. That's what they were trained to do, is just how do you get out as many tax returns as possible? And they get overwhelmed, and that's what their specialty is. So that's one theory on how I do it. And the other theory I have is that accountants traditionally can oftentimes be afraid to charge their clients. And tax planning takes a lot of time. Tax planning it's not hard. Clients always say, it's hard to save on taxes. I say, it's not hard. It just takes a little bit of time. It takes some effort to be able to implement these strategies. And it's not a lot of time, but it just takes time.
Proactive.
Right. Yeah. And so I think that a lot of accountants understand that, hey, I can help with this tax planning, but it's going to take time and I need to charge them for it. And I feel like and usually the charge should be more than what they charge for a tax return. And they feel like, if I've been charging this person $1,000 a year for a tax return, how can I go charge them $3,000 for tax planning? And they feel like if they offer a $3,000 tax planning charge, they think their clients can be like, well, why am I paying you $1,000 for? Aren't you supposed to be doing that for me as part of that?
Already.
Right.
You doing this as part of the services that I'm already paying you?
And so I think there's like a miscommunication there between accountants and their clients on what is provided in that tax preparation. And it goes back to that initial question we talked about, is clients don't understand what tax planning is. And they think that if I have a CPA, they should be doing everything for me. But they're not paying them necessarily to do everything for them. They're paying them $1,000 a year or $750 to file a tax return. That's just to prepare and file a tax return. They're not paying them for the tax planning advice. And the CPA, for whatever reason, time constraints, everything else, isn't offering that as an option for them. And so that's my theory, is that a lot of CPAs know this stuff, at least to some extent. They know the concepts around this tax planning, but they don't have the time to actively implement it with their clients because, one, they're either too busy preparing and filing taxes, or two, they're afraid to charge for it, don't know how to charge for it, don't know how to interact, and don't know how to like kind of produce that end result that tax planning can provide.
Fantastic. Okay. That seems very reasonable. And I'm glad that you have TaxElm to be able to facilitate this gap where 90% of the other CPAs are not providing this type of advice. You've worked with thousands of entrepreneurs. What's the most common thing that you believe that they have misunderstood about paying taxes?
Yeah, it's funny when I talk to business owners, and especially, I grew up in a small town and talk to some people in the small town, and you ask them, what do you do to save on taxes? Or what is your tax plan? What's your accountant talking to you about? And so often, especially in the trades, I hear, well, we hit them up around November, December timeframe, and they say, go buy a piece of equipment, go buy a truck, get a big tax deduction for it. We're going to lower your tax bill this year. And that concept is not what I call tax planning. That concept is you're getting a discount on something. If you go out and buy a truck that you don't truly need, but you're just using it for a tax deduction, or a new piece of equipment that you don't truly need, you're just using it for a tax deduction, you're just getting a discount on that. But at the end of the day, you're out more than that cost. You're out
Sure.
more than what you're saving in taxes. And so I love this concept of, when I talk to business owners, I try to change a mindset shift and try to get them to think of this concept of maximizing deductions. And when I first talked about that, a lot of people think, well, yeah, of course, go out and buy something I don't need, go out and buy things to lower my income, and that's maximizing deductions. And I said, well, no, we want to look at it completely opposite. We want to say, how can we look at spending that you're already doing, but finding a business purpose for it and move it from after-tax spending into pre-tax spending? And to help explain that concept, I always say, think of it as you're a W-2 employee. You don't own a business. You have your gross wages. Your employer takes all these taxes out, and then you get your take-home pay. And any spending that you do with take-home pay is on money that's already been taxed. So any spending that you do is considered after-tax spending. You have a house, that's after-tax spending. You support your kids in basketball camps and baseball camps and volleyball camps. That's after-tax spending that you're using that for. But now when we shift as a business owner, you have your sales or revenue, and you have all these expenses that get taken out, and then you come to your profit. And your profit is what you get taxed on. So any spending that you do within your business prior to it being hitting that profit line is considered pre-tax spending. And so I always talk about, how do we move after-tax spending into pre-tax spending? And that's the concept of maximizing deductions. And so if we look at an example, let's look at the home office. Whether you're a business owner or not, you're going to have a home, right? You're going to be living in a home, and there's going to be costs associated with that. And as a W-2 employee, that's all after-tax costs that you're using to build or to run that home that you live in. But now as a business owner, we can take a home office deduction for a portion of that home. And so that's spending that we're going to do no matter what, but now we're moving a portion of that after-tax spending into pre-tax spending. Or if we look at this concept of hiring our kids, like, as a father, we know I'm always going to be supporting my kids in so many different areas, whether it's amusement parks or camps or whatever it is. I'm always supporting my kids. But instead of using after-tax spending, can I find something that my kids can do in my business to some extent? It might not be tens of thousands of dollars, but maybe it's a couple $1,000s here for something that they can do within my business where I can get a business deduction. They're going to pay no income taxes on that, and then they can go and pay for that basketball camp or that volleyball camp or that amusement park with friends. And again, that's a concept of saying that's spending that I'm going to do anywhere else. But now I'm getting a business deduction for that spending. I'm moving that deduction from after-tax spending into pre-tax spending. And so this mindset shift that I call maximizing deductions is saying, hey, we're not talking about going out and buying things you don't really need. We're talking about just shifting spending that's going out no matter what. But now we're finding a business purpose for it and making it come out of the business.
So what's one of the myths about tax deduction that drives you absolutely crazy?
Yeah, it's The problem that I see is you hear of somebody that says, well, I, talked to this guy or this girl and they've been doing this for 20 years and not getting caught. Or they've been doing this for 20 years. They take 100% of their home as a deduction, or, they use their vehicle for everything else, but they take 100% of it as a business deduction. And so the thing that I often tell people is that, one, we don't know truly what's happening. Someone might say, oh, yeah, I take the full cost of my home as a business deduction, but we don't know what's truly happening on that. And so we can't just take their word from it unless they're the tax professional and they know what they're doing. Can't necessarily take their word for it as our way of doing it. But then the other thing we have to think about is everyone's situation is different. And so this electrician down the road, yeah, he might be able to take 100% of his truck as a business deduction, but can the work from home accountant take 100% of their truck as a business deduction? Maybe, maybe not, but we would have to look at the facts and circumstances. So one theory or one problem that I see business owners face is that they learn their tax planning from the other business owners around them, and they can oftentimes find misinformation, right? And they're missing out on opportunities as well. So not only now are they implementing tax strategies that are not implemented it correctly, they're just saying, oh, this person does it, so I'm going to do it. That doesn't mean that they're implementing it correctly. But now they could also be missing out on opportunities because they're not going after things that might be relevant to them that maybe that person they're talking to doesn't know about yet. And so it's all about, kind of taking that proactive piece of how can I do tax planning for me, for myself? How can I find and learn about it? Because tax planning is about learning about the strategies. Again, it's not hard stuff. It's not super complicated. It doesn't take a lot of time, but it's learning about the strategy and then not just implementing it, but implementing it correctly. Because if we look at that home office deduction, black and white in the tax code, the IRS wants us to take a home office deduction. But we can take a home office deduction and implement it incorrectly and make that deduction illegal or something that the IRS would claw back on. We could say that 90% of our homes are a home office. That's obviously not going to be true. IRS is going to claw back on that. So you can take something that's black and white, legal in the tax code, and make it illegal simply by not implementing it correctly. And so that's this concept of learning and correct implementation that is so key when it comes to tax planning. But again, it's not hard. It's not hard stuff. It just takes a little bit of time. I talked to someone the other day that was looking at hiring their kids. They said, Mike, it just seems like too much work. Like I have to find something for them to do. I have to track their hours. I have to find a reasonable rate for them. And I told them, I said, what if we could pay them $10,000? And that $10,000, it's going to take you maybe 2 hours of work, maybe 3 hours of work, but that $10,000 is going to save you $4,000 in taxes. Let's say it takes you 2 hours to implement that strategy. Is a $2,000 an hour worth it to you?
Worth your time.
So yeah, I said, if it's not worth it, if $2,000 per hour is not worth your time, then don't implement the strategy. But there's very few people out there that are making more than $2,000 an hour where they would say that's not worth my time. And so when we break down strategies from that, all of a sudden the business owner's eyes open up and they're like, wait, that's all it takes is a couple hours to be able to implement that strategy? Yeah, that's all it takes as long as you have the right sources in front of you to be able to do that.
Fantastic. So I'm sure you may have heard of this. How do you respond to someone who says to you, I already have a CPA. I don't need tax strategies. How do you respond to that?
Yeah, the biggest thing, and that's where, when we built our software, TaxElm, we don't do tax prep and filing. We don't do bookkeeping. All we do is tax strategy because we were constantly hearing from these business owners that said, I have a great CPA, but they just don't help me with paying on tax. I'm paying too much in tax and my CPA isn't helping me. They do a great job on the prep and filing, but they're not helping me pay taxes. And so that's exactly what we work with on a regular basis. And so the person that says, I have a great CPA, I think the question comes down to, are you happy or not happy with the amount you're paying in taxes? If you're happy in the amount that you're paying in taxes and you feel like it's a relatively low dollar amount based on the income that you're making, great. Then they are probably working with you in some capacity to do tax planning. And there are CPAs out there that do really, really good tax planning. It's just the vast majority of them don't. And that's where we come in as a resource, is we can come help out those that don't do that planning to help understand that. And the biggest thing is understanding, okay, is there a pain there? Is that tax bill a pain for you? If you're making $100,000 a year and you're dishing out $25,000, $40,000 in taxes on that $100,000, is that painful or not? If you're making $100,000 a year and you're dishing out $10,000 in taxes and you're like, that seems fair to me, then fine. Like you keep where you're at, right? So it's all about understanding, is there a pain there? If there's a pain there, then let's help solve that pain. Let's help lower that tax bill. If you're fine where you're at, some people are fine just paying a lot in taxes, and that's okay. Like if that's what they want to do, even though there's opportunities out there for them, if they are okay with that, then that's okay too.
So, what's one powerful strategy that most business owners overlook, but could start using this type of tax mitigation strategy immediately?
Yeah, I think it's this, like I said, the overall concept. When I talk about tax strategies, I break it down into two separate kind of buckets of tax strategies. I have what I call core tax strategies. Core tax strategies, relatively easy to understand, relatively easy to implement, can be implemented for the most part at all income levels. So whether you're making $10,000 a year on a side gig or you're making $10 million a year on a very successful business, core strategies are available to you and should be fully implemented to their full extent. And so these are things like home office deduction, taking advantage of meals, travel, technology costs, hiring your kids in your business, maybe an S corporation if an S corporation makes sense for your business, maybe making sure you have a board set up in your business. And that's a good one that we haven't talked about, David, yet. I think every business, regardless of your size, should have a board. And a board is someone that helps guide you in your business, helps you step away. And even if you're saying, Mike, a board's for like corporations, you're going crazy now. The board should be, whether you're a solo business owner, no employees, no nothing, you should have a board. Whether you're a business owner with 150 employees and 10 million in revenue, you should have a board. And what does a board do? A board not only lets you step away from your business, because being an entrepreneur, being a business owner can be lonely at times, especially if you're solo. Even more so if you're solo, because you're stuck in that business every day and there's no escaping for you. There's no one to lean into, ask questions, things like that. So a board can not only help you in your business and your mindset, but there's also tax deductions. If you do a monthly board meeting or a quarterly board meeting or an annual board meeting, whoever's on your board, maybe it's family, friends, colleagues, people that you trust that can help you guide your business. You're having meals around that. Maybe you're doing a travel associated with that board meeting. Guess what? These are all deductible costs. And if your friends and family are on your board, the people that you trust the most are on your board, now we're getting a tax deduction for traveling, for having meals with the people that we want to spend time with anyways. But we're talking about our business. We're helping our business out in so many different ways. So those are all what I call core tax strategies that kind of fall into that core bucket. And then we have advanced strategies. And so advanced strategies start to come into play traditionally once we see income of $350,000 or more. Advanced strategies are going to be a little bit more complex, maybe have a different entity structure, legal structure, maybe some investments that we're making to help reduce our taxes, but reserved for those that are higher income earners and can significantly reduce our tax bill if they're done correctly. We need to be more careful about dotting our I's and crossing our T's, because when we're significantly saving on taxes, that can bring in scrutiny from the IRS. And so we just need to make sure that we're doing things correctly. So we always say, let's implement core strategies to their fullest extent. And if we still have a tax problem, now let's look at advanced strategies and see how we can lower that even further with advanced strategies.
You mentioned higher incomes with advanced strategies. Can you give us a quantifiable dollar amount as to where that beginning threshold is for higher income to execute the advanced strategies?
Yeah, typically we say once you're hitting income of around $350,000 or more, that's household income. So that could be W-2 income, that could be W-2 spouse and then business owner, that income combined, typically around $350,000 or more, or someone that's selling a highly appreciated asset. So let's say you have a business that you're selling, crypto that you're selling, a big stock gain that you're selling. If you're having a pretty large gain,
real estate,
yeah, maybe you're not typically having high income years, but you're having a one-time, one-off high income year due to a sale of an asset, that can also open up the door to advanced tax strategies as well.
Great. So we've talked about the traditional CPA model, which is pretty much broken because it's not providing the value add that the clients anticipate and are expecting of their CPAs. The traditional CPA model, typically, we mentioned hourly billing, and for most part, very slow to answer, and vague advice, such as, that depends. I've heard that hundreds, maybe even thousands of times. Let's go to TaxElm, your TaxElm. How is TaxElm structured differently where it is not even a competitor of the traditional CPA model?
Yeah, so when we're looking to build TaxElm, I was taking feedback on what are people complaining about. Talk to a business owner. do you feel comfortable with your tax bill? The answer is no. More often than not, I'm paying, talk to any business owner, they're likely paying too much in tax than they feel comfortable with. And so my question then to them is, why are we not paying? Why aren't we doing anything to lower those tax bills? What are the barriers that's stopping you from paying lower amounts in taxes? And so I started to take some of that feedback. And a lot of it was, well, I don't have an accountant that's helping me out. Or I ask my accountant for help and they tell me it depends and it sounds like a lot of work, so I go the other way. Or my accountant tries to help me out, but I just don't know how to like implement it. Like they tell me to do this, but I don't really know what to do with that. So started to kind of collect all these different complaints about why people weren't saving more in taxes. And based on those concerns, built a software to solve that. And so TaxElm was a software we built of saying, yeah, go ahead.
I was going to say, so TaxElm is a software that adds human service, that adds the human element as well as the software.
Exactly. Yep. So, one of the questions or issues that people arise was like, I don't know what tax strategies are relevant to me. So when people come to TaxElm, they give information about their income, their family, their life, everything that they have. And we produce what we call a tax blueprint that helps them understand, here are the specific strategies that you should be focusing on. Here's the amount that we estimate you can save in taxes. And then the next question we have is, I don't know how to implement it, or I hear about a strategy, but I don't really know, like, what do I do with that strategy? And so with each strategy that we recommend, we have what we call an implementation module that walks you through step by step, tracks your progress. You can stop, start, finish, do whatever you need to do, but walks you through step by step, everything you need to know, and templates, downloads to be able to implement that tax strategy. And the next issue we had is people would say, I can't get a hold of my accountant, or what the advice that they're telling me, I don't understand, I don't get it. And so as part of our software, we have unlimited access to our team of tax experts. So we have a messaging system within our software that you can contact human, real life tax experts on the back end with any question that you have. And we respond within 24 hours. So no longer do we have people saying, well, it takes me a week for my accountant to get back to you. We fix that. And so on top of that, we also do annual one-on-one consultations, Zoom consultations. We do monthly webinars. We do a tax return review. So a lot of things too is I would talk to business owners and they say, Mike, I am saving taxes. I'd say, all right, well, let's look at your tax return. Let's see what we're doing here. And they're like, well, I know, like, hiring your kids. And we'd look at their tax return and they're not hiring their kids. I said, well, you know about hiring your kids, but you're not doing it. Why aren't you doing it? And so that was something we built in the software. Is we do a tax return review. Let's look at your prior tax returns and see if we can find areas that you're not taking advantage of, or not taking advantage of to the fullest extent, that we can look at for more opportunities for tax savings. So that's the bulk of our software. Unlimited access to our team. We respond quickly. We respond in ways that business owners can understand. We build a tax savings blueprint, exactly what strategies are relevant to you. We help you implement those strategies. We do a one-on-one live consultation. We do monthly webinars. We'll do a tax return review. And then a piece I think is really cool is we have a partner directory. And so if a business owner comes to us and says, I need help with this, but for whatever reason, we can't help them out, we always have a partner of vetted people that we've we've worked with, that we can get them introduced to. And so that's another key part, is we want to be that source for business owners of saying, hey, whatever it might be, even if it's something subgear. We had somebody the other day that said, Mike, I want to take my family. We had a really successful year. I want to take my family on a private jet. We've never done that before. So, okay, well, we have a connection. Let me get you introduced to somebody that can help take you on a private jet. I mean, obviously weird stuff, but stuff that some business owners run into. And, if we don't have somebody, there's cases where, hey, we don't have someone we can help you out with. We'll reach out to our network and say, hey, is there somebody that we can, kind of get you introduced for that?
So a form of a concierge service, or a concierge referral resource service.
To some extent, the biggest thing is that if a small business owner has a problem, if they have a need, if they have a service that they're looking for, I want to be able to introduce them to somebody, because there is so much noise out there. If you look at payroll companies or payroll software, there are so many different softwares out there. And so business owners, just like tax strategy, they get overwhelmed. They're like, I don't know what to do. So they go ask the person next door, where I'd much rather say, hey, we've done some vetting on these payroll softwares. Here's a good company that's good for your size business or your industry or whatever it is. And hey, if you're in this industry, don't go to them. Let's go to this other company. And so, kind of helping guide them along, at least giving them a head start, whether they want it or not. If they have a good connection for that, great, like stay where you're at. But if you do need something that you're not happy with, let's get you hooked up with somebody that can help you out.
Fantastic. So as someone that has worked with both new entrepreneurs as well as multi-million-dollar businesses, What's one habit or mindset shift that separates the tax savvy business owners from everyone else?
Yeah, it's just this concept of understanding that it's available to them. I have talked with business owners making $100,000 a year that are super, super tech savvy, tax savvy, where they're grabbing for all these different strategies and they're doing a really good job. We come in and we just kind of button little things up and say, hey, you're good. You've been really studying this stuff. And then we talk to business owners that are making $5 million a year that have never done anything. They're just making money and they're dishing that money out to the government just as quick as they're making it. And so it's all about the concept of understanding, hey, tax strategies are not stealing from the government if we do them correctly. Of course, there's bad players out there. You see the headlines, people going to jail for implementing tax strategy or defrauding the government from tax loopholes and all these other different things. Of course, there is tax strategy that is done the wrong way, that is illegal and fraudulent and everything else. But if tax strategy is done correctly, these are just incentives that the government's giving you. The government gives these incentives to business owners, to real estate investors, to invest in oil and gas. The government in the 80s put in a law in place that made oil and gas investments majority highly deductible. So you can invest in oil and gas. You could invest $100,000 in oil and gas and get $80,000 or $90,000 in a tax deduction in that same year to offset not only your business income, but your W-2 income. That's unheard of, but that's a strategy that's available. And the IRS put it in for a reason. Why? Because in the 80s, they wanted people to invest in oil rigs, and it made that investment a lot easier for them. Would people have invested in solar as much as they have over the last 10 years if there was no government incentive to do it?
I absolutely believe it would not.
Exactly. People put solar on the roof of their houses because, one, it
helps reduce the electrical expenses monthly.
Right. There's a cost efficiency from the electrical costs, but there's also a tax break. And that tax break is the cherry on top. They say, well, sure, I would save some electrical costs, but now I got to have this thing on my roof. I got to do all these different things. Oh, but there's a tax break? Okay. That's the last little bucket that I needed to say, yes, I want to make this move. And so the government wanted to push green energy. So how did they do it? They offered tax incentives. And so, and now it's getting taken away with the one big beautiful bill. A lot of the residential solar credits are being taken away, and you will see those less and less and less solar installs every single year until that credit comes back. Because I think that's the truly way why those solar businesses were growing so much, is because of the tax incentive behind it.
Since you brought up the OBBB, the 2.0 version of the Tax Cut and the Jobs Act from 2017, now called the 2.0 version, the One Big Beautiful Bill. Give us your take on the newly passed legislation, which is one of the biggest tax laws that has passed since 2017. Give us the good, the bad, and the ugly in your opinion.
Yeah, the biggest thing that I think is that from a tax perspective, paying less tax perspective, not a ton in it. For the most part, what it did was avoid cliffs, because the Tax Cuts and Jobs Act was put in back in 2017, and there was cliffs to a lot of those changes to say, okay, after 2025, this tax break goes back to what it was prior to the Tax Cuts and Jobs Act. So the Tax Cuts and Jobs Act brought a lot of tax savings to people at all income levels in the country. And if that were to just go away, if nothing would have been passed, we would have went back to 2016 levels. Everything would have went back to where it was. And so a lot of what the One Big Beautiful Bill was just say, hey, we like how it's been going. We like what the Tax Cuts and Jobs Act has done, and we're just going to make it permanent or extend it even further. So there's a lot of things in there that people are not going to see any tax break necessarily from compared to last year, because it's just keeping what is done. But
it's an extension of continuity
exactly
of the 2017 tax law.
But if it wouldn't have been passed, then they would have saw a big tax change in increased taxes the next year when it reverts back to old levels. So overall, not a ton that's, I would say, super sexy from a tax perspective. With that being said, I think bonus depreciation is one thing that business owners, that real estate investors, everybody loves this 100% bonus depreciation. The government actually loves it too because it encourages investments in businesses, and encourages investments in equipment and land and property and everything else. And so I think that is a really good thing that only helps business owners. But, when I look at the bill as a whole, again, a little lackluster, some really good stuff, but nothing like crazy, crazy new. Again, bonus depreciation, that's been around for a while.
Sure.
It's just instead of 40%, it's 100%. So,
Right.
it's again reverting back to different things that we've had in the past. So overall, I think it's a great bill from a perspective of extending what we're already getting used to. But a lot of people are not going to understand how much it benefited them because they're not going to see the pain that would have happened if it didn't get passed.
If it didn't pass. So we're talking about the Augusta rule. We're talking about QBIs. We're talking about Section 179s, just to name a couple of things. QZs, qualified opportunity zones, stuff like that. All that could have literally gone away, like you said, a cliff. So how, you being a tax mitigation expert, how do you provide advice as a tax mitigation expert? Compare that to, say, our federal deficit in terms of this new tax bill, which is supposed to be, or supposedly, however you want to phrase it, increase the federal deficit by trillions of dollars. How do you weigh both, or do you not? Your personal take again on this.
Yeah, I think that's a little bit above my pay grade. What my goal is to say, okay, what laws have been passed and how do we pay the least amount of taxes based on those laws that are being passed?
Okay.
But again, I look at this as, obviously the people that say it's not going to add to the deficit are saying, well, based on putting more money back into the economy, you're building businesses, that's going to grow, and the economy's going to grow. And, that's their defense on it. Whether that's true or not, that's a political debate more than it is necessarily an economic debate, as much as we like to think so. But when I look at it, I try not to dig into that piece as much as to say, hey, my goal is to help business owners pay the least amount of taxes legally possible based on what we were given by the government. Now, if the government pulls away, so if we look at solar credits, commercial solar credits, for the most part, are sticking around for a little bit while, but residential solar credits are gone, or will be gone really soon. And so my theory is that, okay, the government's no longer wants to incentivize this. So obviously, once those credits are gone, I'm not going to tell a client to install solar for the tax benefit. Now, they can still install solar. That can be a great thing. But I'm not going to tell them to do it for a tax incentive because the incentive is no longer there. And so it's taking what are the incentives that the government's going to give us as availability, and let's take advantage of them to the fullest extent. Because I think business owners are doing a disservice to themselves if they simply are paying too much in tax because they don't know, or they're not taking advantage of what's available to them. That's not what the government wants. The government doesn't want us to pay them extra in taxes. They want us to say, hey, I'd much rather you invest in real estate. I'd much rather you invest in oil and gas. I'd much rather you invest in these things that we're incentivizing you to do. I'd much rather you do that than pay us more in taxes, because they believe that the investments in those different areas, whether it's people, humans, oil and gas, solar, whatever it is, the government believes that investment in those areas will help the overall country in a whole. And so that's why they want us to invest in that. And so that's, a mindset shift I think that business owners need to understand, is that this is not cheating the government. This is taking advantage of what they want us to do. It's just understanding, what is that and how do I do it? What is that incentive that's given to me and how do I take advantage of it?
Great. Can you share a success story where a business owner cut their tax bill significantly after applying your system and you providing them value add?
Yeah. So, when we first started TaxElm, we had some initial members come in to say, hey, we want to make sure that what we think we can do, that we can actually do it. And so we want to use you as kind of a test case. And so I was talking to this business owner, relatively new. He was a marketing consultant for influencers. So interesting business that he was getting in, but he was just starting out. He was a W-2 employee and was making decent money. He was making $100,000 his first year. Didn't really know taxes, like new compliance type stuff, knew he got to file his taxes on time, knew he made to make estimated tax payments, but didn't even know that there was opportunity for tax planning because he's like, I'm only making $100,000 a year, Mike. So like, there's not this opportunity for tax savings with him. And so I think in his first year of business, he was paying a tax bill of like $25,000 or something like that was what his tax liability was. Came to us, we started working with him, started to implement strategies. So first off the bat, we said, let's get an LLC set up. Let's organize your entity as an S corporation. Let's help cut their self-employment tax bill down significantly. Let's look at this idea of maximizing deductions. How do we take advantage of the home office? How do we take advantage of automobile? How do we boost meals and travel and find business-related opportunities around some of those costs? How do we hire your kids in your business? How do we take advantage of the Augusta rule? And how do we set up a board for your business? How do we do all these different things? And so we helped them implement those strategies. Again, nothing crazy. It can be overwhelming because that's what I just said is a lot of different things that they have to implement. But the tax savings, maybe it's 10 hours in total on those that you have to do, can provide significant results. So in his first year, we took his tax bill from $25,000 to $18,000 or to reduced it by 18,000. So from 20 to $7,000.
Wow.
His tax bill by 18,000.
75% reduction.
Just by taking advantage of core tax strategies that were available to them. Now, as his business grows, as he gets into more of an advanced tax strategy state, we're going to be looking at different items. As he, brings on more employees, we're going to be looking at different tax strategies around that. So there's opportunities for growth and, setting up retirement accounts. We did a solo 401k with him, but we didn't fully, maximize out our contributions to it. So there's different opportunities where we could go to a further extent if we wanted to. But again, that's just taking advantage of those core tax strategies that are available to him.
Fantastic. That was a fantastic example. And so to retain your service, be able to have access to TaxElm and unlimited resources that you provide as part of the TaxElm member, I believe this is a membership, correct?
Correct. Yep.
Can you give us a sort of a price point, how it ranges, and how do you go about charging your service?
Yep. So it's an annual commitment. So it's either $250 a month or $2,500 if you just want to pay all of it up front for a year up front.
Okay.
We do 100% money back guaranteed. So if we can't present tax strategies that cover that fee, we'll give you your money back.
Hang on, I'm sorry. That sounds like a fantastic value. Is that for a client such as starting out, making $100,000 in income, a small business owner starting out, or is that for people who are doing fantastic work and I guess need your advanced tax mitigation strategies?
Yeah, to any extent there. So typically what we say is our software, and the guarantee works for anybody. So, you're starting out and you're, producing, say, $10,000 of income, we're probably not going to be able to produce $2,500 in tax savings. But
sure,
if you only have $10,000 of income, you likely have income from another source potentially. And maybe their income from the other source, we can help provide some tax strategies to that. Even if it's just W-2 income, there might be some planning opportunities that we can do to offset some of that. So our guarantee to this day, we've never had to give our money back because we have been able to provide that. Now, the biggest closest we got was someone that said, Mike, I'm saving about $2,500. I paid you $2,500 and
even.
Yeah, it's break even. But when I was talking to him, he said, Mike, a lot of the strategies that we taught that were recommended to me, a portion of them I had already implemented. But he realized when going through the training, going through the implementation modules, talking with our team, he realized that he wasn't dotting his I's and crossing his T's on him, that if the IRS would have came knocking, he wouldn't necessarily have the documentation to support it or to back it up that he needed. So this helps solidify that. And another piece, as he said, is, Mike, I wasn't using a lot of these strategies to the fullest extent. Like I was taking advantage of this S corporation, but I wasn't taking advantage as much as possible. I wasn't really refining my salary and really focusing on those different areas. And so, most business owners that come in, we're closer to that 5x, 10x their cost is typically what their savings is. But we say, hey, we guarantee, we know I can save you at least $2,500 in taxes. And if I can't, I want you to have your money back. And so I'd gladly write that check back to them.
It makes me want to sign up. Fantastic. Any final words?
No, biggest thing is that if this is the first time you're kind of thinking about tax planning, think about that mindset. Check out our podcast. Go to taxsavingspodcast.com. We put out a weekly episode. We have YouTube videos. We have blogs we put up that talk about these different tax strategies. Start to dig into this because I think your eyes will start to open up and realize that, hey, there's a lot of opportunities out there. It might be overwhelming when you look at what's available to you. There's a lot of strategies that a small business owner can implement, but take it one strategy at a time. Write down those strategies. You hear something good, make a note of it and put something on your calendar. Say, hey, I'm going to devote an hour or 2 hours of time to implement that tax strategy. Do one strategy at a time. Don't get overwhelmed. If you can't get them all done in 1 year, that's okay. Saving some taxes is better than saving no taxes. And so do what you can on a regular basis.
Are you able to help high income W-2 earners?
I am, yeah. So, our TaxElm software is designed for small business owners. But when we look at the advanced type tax strategies, again, that $350,000 or more traditionally in household income, majority of those can apply to high income W-2 earners. So if you're in that range where you're $350,000 or more in household income, whether it's W-2 business, whatever it's coming from, $350,000 or more, TaxElm would be able to also help you with advanced type strategy. Now, there's some even core strategies for just W-2 earners. If we look at things like an HSA and 529 plans and taking advantage of some of those opportunities that are available to us, there would be planning opportunities there. But then we would start to dip into some of those advanced planning that works very well with W-2 earners as well.
Fantastic. So for those of you that are listening to this and watching this, high W-2 income earners, make note. Thank you, Mike, for participating in this episode of the Jet Setting Wealth Advisory, for sharing his excellent tax expertise and making complex topics feel a lot more approachable. To connect with Mike, dive into his podcast or check out his Small Business Tax Savings Handbook. Be sure to visit the links in our show notes. His website is www.TaxElm, that's TaxElm.com. And Mike, would you like to provide your personal or your business email for those that want to contact you directly to have a chat?
Yeah, best place to reach us is ask@taxsavingspodcast.com.
Fantastic. And for those viewers, it will be at the bottom of the screen. I'm David Yu, airline pilot, founder, and financial advisor, DTY Wealth Planning Solutions. If you found today's episode helpful, don't forget to subscribe, leave a review, and share this with a fellow business owner or your pilot colleague who's ready to get smarter about tax planning. Until next time, stay the course, think strategically, and continue building your wealth with confidence and purpose. Goodbye.
Thank you for flying with us on today's episode of Jet Setting Wealth Advisory. If you enjoyed your journey through the fiscal skies with David T. Yu, don't forget to subscribe to our podcast and keep your financial knowledge soaring. For more insights and personalized advice, visit us at www.dtywealthplanningsolutions.com and connect with David directly